Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're experiencing some selling pressure today. 10-year note futures are coming off a 3-week closing high. That December future is now down some today at the 110.10 level. Also rolling of positions from December into March, as now March is actually experiencing a little bit more volume than that December future as we continue to work our way towards expiration. But some selling pressure here today after seeing the highest close in 3 weeks in the previous session. And driving factors today, a couple things, data-driven primarily, housing prices coming in higher than anticipated, consumer confidence coming in pretty much in line with expectations, but higher than the previous month. So we continue to see the consumer remaining fairly confident and housing prices continuing to move higher. So those two factors, I think, are the primary drivers as to why we're experiencing some selling pressure here today. And those yields now, we're looking at that 10-year yield higher today by 5 basis points to 431 basis points. So moving higher on the yield curve as well. When you look at the back end of the curve, selling off more so than the front end of the curve. The 2s and 3s are pretty flat on the day, and then as we work our way towards the back end of the curve, heavier selling pressure, we're seeing yields moving up anywhere from 3 to 5 or 6 basis points, depending on where it falls on the yield curve. And another interesting dynamic was that we did have that yield curve flatten quite a bit here the last couple weeks, and now, at least for today, seeing a little bit of steepening of that curve as that back end sells off. So we're seeing the spread widen a little bit between the 2-year and the 10-year. After it got pretty much to parity here the last couple of days. So selling pressure today, moving that 10-year yield higher, prices lower, coming off of 3-week highs.